Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about that stock market going down. I know a lot of you may be panicking if you're in the markets, but no need to panic. The economy's not that great. There's simply 30, 40, 50 million people out of work. There's people that do not have stimulus money coming in. So what do you think the market should be doing? Come on. We're going to talk about it, and welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. Well, as you can see, we're on the Stop Struggling Now YouTube channel page. And as always, I humbly request that you share the videos to help other people. This is going to be about stocks, and I know the all-time highs for the NASDAQ, the S&P 500, and the Dow still has not hit all-time highs recently, but the fact of the matter is the stock market has risen. And now there has been a decline recently, and I know there's a lot of people that use this decline as saying, well, see, this is why I don't invest in the stock market, that I don't like losing money. But before we get into this, please, we have a join button over here. If you'd like to become a member of the channel, support the channel, you get special emojis, an icon next to your name, special videos, and on the community tab, sometimes special videos by me once or twice a month, and I send special messages on the community tab just to members only. And so hopefully you'll join and support the channel. Now, let's get into this mentality about when the stock market goes down, because a lot of people try to use this as an excuse as to why they don't want to lose money, even though you've already put money in, and therefore the stock may have went down. You think you're losing money, but you have to think of it this way. There's such a thing that you've heard me talk about before, dollar cost averaging. So when we're talking about dollar cost averaging, I'll give you a perfect example. Let's just say a stock cost $10 a share, okay? And all of a sudden it drops all the way down to $5. And you believe, after you've checked out the company, that you believe that in the long run it's going to work out. Well, instead of selling the stock, then you should buy more at the $5 price, because now your dollar cost averaging is now the difference between $10 and $5 is $2.50. So if you buy the stock at $5, then it's $7.50 is now what your price is. So keep that kind of thing in mind, and what you do is, if you do something, invest weekly or monthly or every other month or daily, however you want to invest, then that will help you with your dollar cost averaging. And this way you're not sitting here looking at the stock market when it goes down, because the stock market goes down and it goes up. So therefore you can't panic. So don't use that excuse. Investing is the best way for your long-term wealth. Okay? Just because something goes bad this week, this month, we have a coronavirus situation right now, doesn't mean that you don't come out ahead later on. In fact, before I get into anything, I'm just have this up by Market Watch. The only reason I had this is because it says all 30 Dow stocks are falling, led by Salesforce and Apple. Me, I'll tell you right now, I'll be buying more Apple next week. Why? Because their stock has went down 3% this week. All right? It's pretty simple. There's nothing to be afraid of. Apple's not going anywhere, right? They're not going anywhere. Look at this. They're down to $106. When they split, I believe the split, they're around 115, 119, something like that. So here it is again. You can get yourself a little bit of Apple shares, and if you have Robinhood, where you get your free share of stock, you can buy partial shares. If you can't afford the $106, you can buy $10. You can buy 20. You can buy 50 or 100. It doesn't matter. If you don't, it can't afford the 106.84. But here is dollar cost averaging. I bought shares when it split at 115, 116, somewhere in there. So now I'm going to buy some more Apple since it's down to 106. So my dollar cost averaging comes down. Simple. I'm not scared. They're going to come out with smartwatches. So anyhow, you got to do your own research and figure out if this is going to be a long-term play for you, because there are tax ramifications as well. If I bought Apple at 107, let's say, and it goes up to 120, and I sell it within a year, then I owe 25% in taxes on it, because you have to hold it for a year, and then after a year it's 15% tax on it, capital gains tax. So these are the things that you have to think about when you turn into an investor, an entrepreneur, a CEO of my life. So I'm going to show you something right here, because a lot of you are scared about investing. This is Warren Buffett, that everybody knows as the Oracle of Omaha. And on March 3rd, 2020, Buffett snapped up Delta stock after the coronavirus, sent it down 20%. Now, I know what a lot of you are thinking, but see, here is what he did. Deployed 45 million, almost a million shares. All right? Paid an average of $46.40. That is in March. Look what happens later. This is today's price, $32.84 at the close on Friday. He bought 46.40, and now I'm going to show you he sold all of his airline stocks because of the coronavirus May 4th, 2020. Now, do you see here? He lost money because he realized that the airline stocks could be in trouble because we have a lockdown for pandemic. We have a situation where traveling outside the United States, we're being blocked by several countries. So therefore, airline and hotel industry, there will be a further decline. So he decided to get out then. So again, just because you think all the rich guys never lose, they do lose. But they have to figure out how they're going to write it off. It's all about taxes, all around things that they can do, because it's going to be written off as a loss. So see, there's ways to do it. And remember, his Berkshire is a corporation. All right? It's an actual stock. You can actually buy Berkshire Hathaway stock as well. But it's a company. So anyhow, I just wanted to get you that thought out of your head, that somehow people don't lose money. But in the long run, as long as you wait it out and invest wisely, you could say, okay. And we're going to talk about some of that invest wisely. So some of you say, I don't want to look at stocks, I don't want to invest. So I have a link down below for Wealthfront. You guys have heard me talk about this before. You can deposit your money with Wealthfront and they can invest for you. Up to the first 5,000, it's free using the link down below. After the 5,000, then they charge a yearly management fee of 0.25. But again, go look at wealthfront.com, and there's a link down below so you can sign up. Please use my link, and you can go find out, and you see why they call it Meet Self-Driving Money. All right, and so I'm just going to go over this pretty easily because you can read this when you go to their website, but you can see deposit your paycheck with Wealthfront, and with the click of a button, you can have us automate the rest. Our software can top off your emergency fund, pay all your bills, and even invest the rest to help meet your goals. We call this future self-driving money. So if you are afraid to invest yourself, you can have an allocation, as you can see here on the right-hand side, and you could tell them to pay a certain amount of money, and the rest they will invest for you, almost like your own private brokerage account, except it's automated with online fintech type marketing. So again, if you don't feel like investing yourself, this is a great way to do Wealthfront. And for all those others who want to get a free share of stock, it's still available at Robinhood simply by downloading the link down below. We've mentioned this now for several months, all year, and not that many people have taken me up on it. I don't know why, but again, This is also affiliate marketing. Once you sign up, you can share your link with your friends, your family on your social media, and that also will help you out to get free shares of stock. So again, get your free share of stock. How's it going to hurt you? Even if you're not going to invest, you might as well just get a free share of stock, because some people apparently get Apple. Some people get things like that. I get stuff that's like $10 or less. But I'm just saying, every now and then they kick out a nice stock that's 100, 200, 300, 500, 800, 1,000. You just never know what's going to happen. But I have never gotten one of those. Webull is another platform that they have a free share of stock too, but you do have to deposit now $100 or more, and they're giving you advanced level search information so you can find out more about companies. They're calling it free level 2, advanced, and a free stock, but you have to deposit $100 or more. So I'm going to move into something else, because now you're saying, hey Eric, what are some of these stocks that I can invest in for the future, even when the stock market goes down? Well, let's get into some of that. We're going to talk about SaaS, which is software as a service. You're going to hear a bunch of this SaaS, as you can see, and that's software as a service. And it's just like technical terms, like when you go to school and you find out what the meaning of something is, or you do accounting, or you're in the finance field and they have different names. Well, when you're investing now, they have this software as a service, SaaS, and they say these SaaS companies. So the reason why I left this open is because you can see across here where there's Salesforce, Twilio, Zoom, Okta, Workday, Paycom, Trade Desk, even DocuSign is considered software as a service. And these companies have been going meteoric, a bunch of them, and you can see here. So I just wanted to give you something to look at straight out. So you see Box, Black Lives, Zero, Pros, all these, Proofpoint. These are SaaS, and they're software providers, and so therefore these are growth stocks, and you can get in now, which they've already went up greatly, but their software is going to be used for situations where it's stay at home situations. Now stay at home is going to be more convenient. People are going to be more conducive to using it, because now they're accepting it, whereas before everybody wanted to show up at work, wanted to be in brick and mortar locations, so therefore they were resistant to it. And that's why in the last 4 to 6 months these company stocks have risen. So you should keep your eye on companies like this, because more and more people from around the world may need this service. Instead of traveling from coast to coast, continent to continent, they'll start using like a Zoom. No problem. So these are the things that are going to come out. And you guys have heard me mention before 5G. So again, you can either do 5G into companies like T-Mobiles and the Qualcomms and the Verizons, the Ericssons, the Nokias, but there's others like American Tower. You'll be surprised at their shares. They're cheap, they're affordable, because 5G isn't everywhere. It's going to be built out over time, so these should grow a little bit. So this is why I'm advocating you do your own research. I'm not a financial advisor. I'm not a financial guru. As you know, this is the no guru zone. So this is all I'm trying to say, is use your head. It's common sense on what's going to happen in the future. So why wouldn't you invest? So even if the stock market's going down, you take advantage. So when Nokia goes down because the stock market goes down, and Ericsson went down, those are the ones that I was talking about before. Verizon go down, American Tower goes down. There's opportunities when they go down 5, 10, 15% that you can pick yourself up a few affordable shares. And so when they start building out, these companies should start rising. Okay, I'll go look here for you. So we'll go over some of these. So there's still Broadcom over here. There's TSMC. So you can see all these here are available on a stock market. Not all. I believe there's one in Seago. I mean, look, they just take your pick and the fundamentals and what city or country or whatever. It all depends, and you feel which stock you feel comfortable in choosing to buy. Again, it's up to you. People are getting older, and now what happened? Teladoc, all these online companies are trying to get in here and see health. And when you have health apps, or when you have pharmaceuticals, the run to the coronavirus vaccine, what do we have there, right? So we're going to have companies like, I like Pfizer all the time. PFE is their stock symbol. P is in Paul, F is in Frank, E is in Eric. I like them all the time. And again, thanks to Curtis Davis, who had LV, I can't remember the symbol, but Livongo, he mentioned that when it was under $100. And now they're probably around 130. And this was just 3 or 4 months ago. So there's another. Now I'm going to get into this Amwell here, and that's an IPO that just happened 2 or 3 days ago. So this is going to be interesting, but we'll get into it in a second. But stay tuned, please. But here's the artificial intelligence. And a lot of people have heard about NVIDIA, but how many people knew that Apple was in it? How many people knew IBM was in artificial intelligence? Here's Amazon. Can you believe this? Look at this. Why do you think Alphabet, which is Google, look at these companies? Of course, these companies are going to be big time. They're in the artificial intelligence space as well. So again, you have other choices here that you can pick. Five9, Robot, all kind of different choices, but it's up to you which ones you want to choose and what works for you. Be the CEO of your family. Be the CEO of your life. And again, you can pick different softwares such as Robinhood, which allows you to purchase fractional shares for a dollar amount. So if you wanted to do $50, you can do that. If you want to do $1,000, you can do that. And it doesn't matter about the share price. So you can just do that every month or every 2 months, however you want to do it, every week. So this is how you do things. Now, we're going to get into something because I want to show you the reason why you need to be a top 1%er. Because again, you're sitting there maybe working at a job. You may be self-employed, but you may not realize that you're going to have to up your game. You have to be able to figure out something that you can sell to the masses. Something where it's okay that you make your $2,000 a week. It's okay you make your $1,500 a week. It's okay you make your $3,000 a week. But eventually, inflation, taxes, and other fees may catch up with you and siphon off 10% to 15% of your money. And the next thing you know, you're sitting there treading water. So I'm just getting you in your mind right now. Nearly half of the world's entire wealth is in the hands of millionaires. Now, look at this. Look at this right here. There are a total of 46.8 million millionaires worldwide, and they own 158 trillion. You seeing this? 158 trillion. And in 2019, the total amount of global wealth grew in 2019 to a total of 360 trillion. Do you see this? All the millionaires own 158 trillion, nearly half. That's 44%. And it gets worse, ladies and gentlemen. And those are millionaires. And by the way, out of the 46 million, there's 19 million are from the United States. All right, just so you know. Now, look at something else. The top 1% of Americans have taken 50 trillion from the bottom 90%. Come on. I'm going to have the links down below to these pages so you guys can read them for yourself, because you're going to find out how far back on the 8 ball you are. Now, the 50 trillion is over decades. So you can see here a staggering 50 trillion. This is how much the upward redistribution of income has cost American workers over the past several decades. That's $50 trillion that has been passed up from the bottom 90th. I keep telling you, you want to be a 10%er, which means you need to own businesses, which means you need to own an LLC. You need to have 7 streams of income, whether that's 7 different companies or one holding company and 7 subsidiaries. However you want to do it, you gotta get businesses. It's not so much the trinkets. You don't need cars. You don't need houses. You don't need none of that. You need businesses that generate income. Because when you have businesses that generate income, that's how you create wealth. Because now you don't have to be anywhere. You're still going to be making money from your businesses while you sleep, while you're on vacation, while you're anywhere you want to be. All right? So I want to just keep that in mind when you're thinking about, no, I'm not going to invest. No, I'm not going to do anything. No, I'm just going to go out to the club tonight because it's a Saturday night and waste away hundreds of dollars instead of putting those hundreds of dollars to make the money work for you. That's what you should be doing, is trying to make your money work for you. Not just you work for the money and then go out and spend it. There's nothing wrong with spending money, but at the same time, you should invest so it makes money for you in some vehicle. All right? Now, let's get down to the last part. It's not so much about what stocks you should buy or anything like that, but I wanted to show you something because, again, a lot of people think they missed out on something. And when an IPO comes out like Snow, and a lot of people hear this, that the Snow IPO started at $120 and that it doubled on the first day, and now it's worth $70 billion. And now you find out about it and you're saying, man, I wish I could have got in for 120 and it doubled. Man, I could have made a lot of money. Well, guess what? A casino has to let people know that there are winners, right? Otherwise, nobody would come in the casino. Well, this is the same thing here. The Snowflake IPO, you could not buy Snowflake for 120. Sure, on the day it came out, they were saying, well, it's going to be 120. That's not how it works. So they opened up early where people can put in early bids, right? So they saw people were bidding 130, 150, 170. So guess what they did? They come out with the first sale of the day is like 240, 235. I don't know the exact number. So now the general public thinks that the stock opened at 120, went up to 230, 240, heard it went up to $319 that day. And everybody has this visions of grandeur. Man, I could have bought 5 shares. I could have bought 10 shares. And you mean I could have like tripled my money almost? No, you could not have. The best you could have done was buy at 240 and sell at 319. That's the best you could have done. Because why? The reason why I'm on this page here from CNBC is because Salesforce and Berkshire Hathaway, as you can see here, agreed to purchase $250 million worth of Snowflake stock concurrent with this IPO. See, they got to buy $250 million worth of Snow at the $120 price. Salesforce and Berkshire Hathaway have doubled back in Silicon Valley, and when it was $5 a share back in Silicon Valley privately, now they're all millionaires. All right, they simply only needed a few shares. How many shares could you have bought for $5? Right? If they would have said, well, the lowest we're going to take is $5,000. Okay, cool. 1,000 shares. So you guys can start doing the math. 1,000 times 200. 240. You can start doing the number, do the math. So that's basically what they're doing, and I call it insider trading. So don't feel bad unless you have the ability to be at Silicon Valley or be in these startups and get these shares while they're cheap. When they say, hey, give us $20,000 and we'll give you $2 a share, that's about the only way that you're going to be making a ton of money on an IPO. And by the way, just so you know, don't be worked up about Snow, because in about 3 months they get to add additional shares, which is going to dilute the price in about 3 to 4 months, and that's, I believe, going to allow people that were in the IPO to sell. I don't know really. I might do a video on it, but I do know they'll be able to dilute the shares. They're going to be able to offer more shares. So that means now the share price is going to decrease. So just give you an idea of what I think is going to happen. So anyhow, I just wanted to see right here so you didn't think I was messing around. See the IPO priced at 120 a share. See that? That's what happened. It was priced, but as far as trading on the stock exchange goes, it started at, here we go, I can tell you right now, started at $245 a share when it began trading. See what happens? They saw the early market movers putting in 150, 170, 175. And so they were like, F it, we'll just put it at 240. Well, apparently they did 245. That was the first trade. And now look, it's at 240. Days later, See? 238. So just giving you an idea, just because an IPO comes out, don't think you missed the boat. All right? This thing's probably going to go down a little bit more because they still have an infrastructure to build out. They still have things to do. But don't think that you missed out and you heard that it was 120 and now it's 240 and you could have doubled your money. No, you could not have. You could have only bought it 245 when it came out and it went up to 319. That was it. Then it dropped back down quickly. Here comes another one. I'm going to give you guys something that I'm purchasing. This AMWL came out last week as well. And they started at $18. I believe when it came out, it was like at $21 or something of this nature. And as you can see here, this is $23. And it came back down. It went up to 25, I think it was. It went up to 25 in the same day when it came out. And I think it went up 25.50. But I don't see it here on this chart, which is kind of weird. But okay, let's say it went to 24.97, 24.96, but as you can see, it's down to 23.02. This is a health stock, and you saw it on the list over here that I had it, Amwell, right here. American Well Corporation, AMWL, for everybody on podcast. So again, this is something that I'm looking at because they are one of the largest health organizations in the country. And their stock price is very small, just by comparison to other health organizations. So that's why I'm getting in early. So for these guys, but again, I didn't get in at the IPO at 18, like the Goldman Sachs of the world and those kind of guys. But I'm still going to get in on this, and I feel strongly that the health-wise it'll go up. So that's all I wanted to do with this video right here, ladies and gentlemen, is get you to understand you can't win it all, and therefore that's why you invest in the long term. So again, that's all I have to say. Thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why you have to invest while the investing's good. And this is why you have to keep in mind when the stock market goes down, you buy more. You can't be shy. You have to be fully in 100% because our stock market can go down. It could drop drastically. And this is why you have to think of alternatives such as gold, silver, precious metals. Look for the dip in the next week, 2 weeks. If it drops down to the 26 to 25 to 24 for silver, if you can get some under $2,000 in gold and silver, things like that, look for a little dip and buy some pieces, whether it's a full ounce, whether it's a half ounce, can't do that, quarter ounce, a tenth of an ounce, whatever it takes. Get some physical, and then also think about on the stock market, there are ETFs. Minor stocks like B as in boy, T as in Tom, G for instance, A as in Apple, U, Y for instance, D as in David, R, D as in David for instance, F as in Frank, S as in Sam, M as in Mary for instance. These are minor stocks. So when the stock market goes down, the wealthy try to find safe havens to put their money so they don't lose value. And that's why precious metals is where they usually go, and you have to think about cryptocurrencies as well. Ether, Bitcoin, stay with the big two, and then all I put out with the Vintech, and we have Lend, L-E-N-D, which been doing a little thing with because of why they coming out with the fintech banking. They help out with loans and lines of credit and things like that using cryptocurrency. So again, this is what you have to look at when you're an investor. So hopefully I've helped out a little bit. And with all that said, keep your head up, keep moving, and I'm out.